Hi everyone, today is Wednesday, February the 5th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Taking a look at the hourly charts on the ES, we can see that we've been in a clear digestion mode since the tariffs went into play. We have recovered, and let's do ourselves a favor and remove all the annotations here. And we can see what we've done is really fill in the gap in distance, but now we're trying to build volume around that gap. We have higher lows, but we also have highs that seem to be in place. Now we do have the employment report coming, and things continue to change across the landscape very, very quickly as the new administration puts a lot of things into play. What I suspect here is a little bit of a wide sideways pattern. If we take a look at the volume, the biggest volume event is still from February 3rd. So we'll draw that. And what we can see is that we're really trying to battle and stay up over that line. So today clearly appears at the first pass to be a buy the dip event, right? Here are our higher lows. If we see the trend line, we can see that there's resistance up there. But my suspicion today is that the go, no-go line for the E-minis S&P is 6,001, right? For the intraday trader, we might go, hello, Fred, we are 30 points away from that. Yes, indeed. You can look at the sideways patch and you can say, all right, I'll try a secondary long round and about 60.17, and that ought to give us a pretty nice area. If you want to trade in the direction on a tight intraday formation, remember, trend is relatively flat in the near term. Momentum is cresting up from the bottom. And so what that tells us is that as buyers are coming in on the dip, sellers still have us in control over here. Where does that change? If we break out of the point of control above 60.68, that's also a gamma line, pretty important. Or if we get up over 60.46 and we hold that region, that's also giving us some room. But look at how long it took us to get to 60.68. And then, we rotated right off of it. See the topping formation here. Momentum turns flat. We fail to crest higher. And then finally we break, which gives us the first pass bounce into resistance as our first sell zone. And that is 60.54, if you're so inclined. All right, let's jump to the NQ. So Alphabet missed, but it's not moving that much. PayPal also missed. AMD also missed, but none of these guys are moving very much. And the NQ is still caught inside of this range. Let's delete all our annotations so we don't get overwhelmed by that. Remember, the goal is to look for the highest volume candlestick. I like it when the range and the volume coincide. And that's what we have right now. You can see that we are above that line, that high of that area. My suspicion is intraday. That's going to be the area that will see the most fighting. So far, they dipped below it, shook out the weak hands, and then lifted. So we'll go to the close of that candlestick as our no-go line, or go-no-go line. That's 21,421. If we lose that zone, value area low at 21,321 is what we're doing likely from this space. Notice moving averages are a bit flat. Momentum is cresting higher, but that flat to downward formation tells us that there's a bit of a fight that's going on at the volume point of, oh no, that's the VWAP. Volume point of control is 21,572. I wouldn't be surprised if we see price action to the north here. We are making higher lows. Dips are still buys. If we crest it, we can see this is where the primary group of sellers have positioned themselves at 570. So we easily could run into that area today. We have some news coming up. We have the EIA report that could move things a bit. Even with what got sent for Iran, oil is down. It's very, very interesting. Very, very interesting what's going on there. There's some very big players holding the price of oil down at this juncture, and maybe a little bit of saber rattling because, you know, ultimately so much can happen. But here we go. Sorry about digressing there. We are at a fight zone, and that fight zone is 21,495. If we breach it, 527 is next. If we lose it, 21,453, right? So 21,527 above, 21,452 below, with a big squishy spot into the go, no-go line of 21,422. Golly, that took a long time for me to say the obvious. Okay, here we are in the YM. Look at the compression. We got another move coming. Direction? Your guess is as good as mine. My suspicion, here's the gap from the trade wars. We are sitting above this wick, but we've also tested the close. So again, I'm going to remove all the annotations. Why? I want you to get accustomed to doing this with your charts. Highest volume, luckily combined with the biggest candlestick. We are up over the high of that candlestick, but it seems pretty important that the close of that candlestick at 44,555 is pretty important. What are we looking at? Potential volatility expansion. These are starting to open up. The Keltner bands are. What do we have for trend? Dips are getting bought, right? That's the big picture. Dips are getting bought. Where's the go, no-go line today? I honestly believe it's this 44,500 area, right? 44,540, 44,500. Something in that zone that says this is what we want to see on the dip. That means buys are going to be a good shot there. Selling pressure, if the pressure from underneath keeps building, it's going to blow out over the top of this. So selling up here, not ideal, especially if the momentum continues and we start trading above the VWAP and all the moving averages. Dips or buys here, right? Go, no-go line, 44,530, somewhere around there. Edges, if it breaks that zone, look to deeper support, 44,400, to the VWAP from several days past, 44,350. I wouldn't be surprised if we see another sideways day like this today, folks. We're just waiting on the employment numbers. Let's go to micro Bitcoin. Let's remove all our annotations. Let's look for, oh, that's the biggest volume. All right, let's do it. By a hair, it's the biggest volume. Notice they shake the trees down at the low and recover. This is from February 2nd. Yep. And where are we? Look at that. We bounced right off of the low. The high of this candlestick. That's 97,000. That's going to be our go, no-go line today. Are we sideways? Yeah, you betcha. Look at that. Sideways to down. Notice what's happened. We have lower highs and now higher lows. What's this mean? We're going to break. This framework is going to break. What's the direction, Anne-Marie? I don't know. So what do? We watch for a momentum shift and we watch for it to get out of this box, right? Notice this candlestick. This candlestick is the 4 o'clock close of yesterday? No, February 4th. Yes. Look where the top of the candlestick is. 99,250. We're building something in here. So the moment we close, I would say a 15-minute candle above 99,000, we're going to try and push back up into the VWAP, which is 100,240, and then the point of control, which is 102,500, thereabouts. So there we have it. That's what we're looking at there. What are the best buys? You know, if the go, no-go line gets breached, easily it comes down into 97,000. You could try something there. If it loses that edge, it's, 94,000 is next. So I would say wait for it to recover our go, no-go line for you to go long. And if you're interested in going short, trend and momentum are in your favor. So the big spikes up into 99,800 could give you a very nice position to the short side. Let's look at oil. We talked about Iran earlier. Big spike yesterday, huge volume. Let's get rid of these candlesticks. Excuse me, the annotations. Let's get it tight. Yeah, this big move over the Iran news, and we're in the middle of the box. Okay, now 72 was a great buy zone, 72.20. We talked about that, 72 to 72.20. Now we're in this heavy congestion zone. What is trend? Flat to down. What is momentum? Steeply down. Notice, if I'm under the moving averages and they're sloping down, and my momentum is down, my candlesticks are usually downward, right? They can retrace somewhat. These guys have been retracing each other pretty strongly. So you want to wait for the bounces to sell. And if we close over 72.70, it's more long action. So what's the go, no go? If we use this candlestick from February 4th and hold the 50% range, my suspicion is the line in the sand for buyers will be 71.56, right? As long as we hold that ledge, the pullback into this range, very likely to go sideways like this. And then you can bounce up. Here's the rub. If you try to go long here, you're going to run into tremendous resistance. So although that's the go, no go for the long, that's $71.56 here in oil, our CL contract. The big thing to watch is what happens at 72.65. Now, yesterday, I talked about that number, 72.65. Notice what happened there. 1, 2, if you were on Top Step TV looking at the YouTube feed, I said, hey, 72.67-ish, going to be an important number. 1, 2, 3, 4, 5, 6, 7, 8, 9 hourly candles danced around that number. So it should tell you something when that happens. First thing you look for is, am I failing to hold higher? Or am I succeeding to hold higher? This failing to hold higher around this important area tells us that we've got this negative drift. This heavy congestion event here tells us that we've got a potential buying pressure event that might show up. Wait for it to show up. I like 71.56. I do. I like that number. I think it's a good number. All right. Let's go to gold. Screaming ahead. I have not read the EU news. Probably something EU related. But look at where we headed. Big fat round number. Let's remove all the annotations here. Crowd sickles. I forgot to cover one of my positions I had into resistance. Anyways, here we go. Let's look for some big volume over the range. Where have we got any monster volume? Right here. Beauty. This is the candlestick, 10 a.m. candlestick, February 3rd. That's our biggest candlestick of this particular formation. Where are we? 2%, 2x, right? So what does that imply? If I fail to close higher after I hit, 2, 1.5, those kinds of things, and I start retracing, 1.5 is going to be next. So where's the next intraday buy zone? I would say 28.81, right? 28.77 was that big fat number that I was looking at for a really long time. So that tells us what we're looking for. Pullbacks or buy zones. How do I know I'm getting a pullback? Well, my momentum is dipping a little. How do I know it's a buy zone? Because trend is up. And trend is up pretty savagely. If you're staring down these 1 hour candlesticks and you're going, man, I don't know that it's going to come into 28.81, you could buy right here at 28.90. What's your risk? 28.81. That's $11. That's a lot of cash. So you want to be careful. Why? I have a little momentum drift down. I'm failing to hold higher. If I take this at 28.90, it immediately needs to bounce into my 28.96 and above. Otherwise, I'm sitting on the wrong side of the trade. Okay? This thing, I would not be surprised for gold to hit 4,000 by the end of the summer. I wouldn't at all. I wouldn't. So what is that saying ultimately? Well, it's saying a lot of things, but we're not going to be circumspect at this particular time. All right, here we go. SPY, doing the same thing. Great big motion. Let me remove our lines, right? You want to look for volume power. That's this candlestick here. Very tight with no upper shadow. That's very interesting. No upper shadow. Look at where it's fighting. It's fighting at the 1.5 fib. Yes, 50% is not a fib, but we impose order on the market. It does not appear naturally. I mean, you could say it appears naturally because humans are natural and we're making it happen, but it's not. There's no magic here. We force order onto the things that we touch unless we're naturally chaotic. And then we force disorder. But markets try to be orderly. What are we doing? We got a high. Tells us sellers are at 601. The moment we get an hourly candle that closes above that, doesn't mean it won't stretch above it. That's all the way at 603.50. But the moment it closes above it, it's going to tip the balance. Look at where the movers are sitting. They're buying the dips, right? Pullbacks have been buy zones. What's this morning's pullback? 597. Where's the go, no-go intraday? I say 595.80. That's our go, no-go line. If it loses this area, sellers are going to try and force it into the next line of liquidity down here between 591 and 590. As long as we pull back and hold this box, we're going to move into this range, and then our next stop will be 603. So buying near 595 looks great for now. And if it breaches and holds 600, we'll be headed to 603. A lot of sellers up here, folks. VWAP is up here. Point of control is up here. Momentum is down to flat. And moving averages are sideways. So this is a range-based day. Let's go to the Qs. Let's remove our images, our storyboards here. Finally on the Qs, where's our biggest candle? Whoa, that one doesn't have any volume. Our nearest volume candle on the 1 hour formation is this one here. The range formation, this is where things get a little sticky. See this range? They're going to look at it, right? So although this one has the most volume, this range here gives us the areas of true resistance, support, expansion, etc. Right? So we have to use two of them together. Where is the go, no-go today? $517. Above that, buyers are in control. Below it, sellers take over, shove us into 512 and 507. Intraday battleground, 519 to 523. We get up over 523. Notice we've been making higher highs also. So this is just a grinding motion. The problem is, folks who like to look at flags are going to say, that looks like a bear flag to me. So Could it be? Absolutely. Could it not be? Absolutely. All right, so look at the range. If it gets up over this 525, don't hang on to your short. That's not going to be smart. Just pay attention and take your lumps if you go short up here at 526 and it breaches, don't hang on. All right, it could run hard. The buyers could be in control, but the sellers are definitely caught flat-footed with this continued rise. All right, folks, that's it for me. I'll see you on the streams.